Hey everybody, this is Jim at SP500chart.com. It's a few minutes before 6 p.m. here on the East Coast on July 28th, 2013. And we're going to look at the chart of the S&P 500. But before we do, I just want to remind you, as always, that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. Look, I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out on a 15-minute chart, I'll be honest with you, the market is giving me, maybe not you, giving me kind of mixed signals, because we were up in this ascending channel for quite a while, really, since late June, and this move lasts more than right about maybe call it a month. Then we break this support line, but we're not really breaking in anything that could be considered in a tumultuous fashion. So it's not like we've been going up and then suddenly, whomp, we get slammed down within 3 days, to the tune of, 4 or 5 or 6%. Really, the 3 days since this break took place has barely resulted in even a loss. It's actually, I think we broke. Well, let's look at it a little closer. This channel broke at about 1696, and here we are at almost 1692. So really, it's almost as if nothing has really happened, which leads me, I can't speak for you, leads me to wonder what is happening. I mentioned, and these are not my words, they're the words of John McGee, and they're not really his words, they're the words of technical analysts who've studied charts for many decades or even centuries. It's been said that when a channel breaks, it breaks either to reverse or to consolidate. So that means when you break, you either break to go down, which would be a reversal, and I don't mean a reversal that takes out and sets a new low. I just mean a clear reversal. And we haven't seen that yet. Could be on the horizon, but we haven't seen it yet. The other reason you break the channel is to go sideways, and often you end up eventually taking up where you left off and starting a new leg up. I want to be as frank as I can with you. There are two things in this chart that stand out. The first thing is clear resistance at 1698. If that gets taken out, then I think we start a new leg up that will likely come up and tag this yellow line here. The other thing that could be happening, however, is the setting up of a topping pattern. I thought this line might serve as a signal that we would be coming back down to at least the mid-1650s. We started out looking like that line was breaking on Friday, and then immediately after getting about 3 or 4 points underneath that line, about 4 points, the S&P bounced pretty hard and started moving back up. So what makes this particularly interesting is the fact that where we're heading back up to, we've also broken a very short-term resistance line. And what I mean by that is, if we draw a line over what I think are probably the more important little tops here, I think this is the line and where it should be. You say, well, what about this here? Well, you get an opening rally. I don't count those quite as significantly, even though this was also an opening rally. I just have a feeling that this is a technically significant line, and we're over that. You can see too that late in early in the afternoon, but in the latter part of the day on the 26th, the market rallied up to about this point and then started to sell off, and then said, no, we're going to get over this line. So I think this may be worth keeping an eye on. I also mentioned that we had this little potential bear flag that did play out into Friday's weakness, kind of set up that move down, but again, quickly recovered, and we actually ended up with what looks to be a fairly little bullish move off of this bottom here. My suspicion is that we will see some follow through, and we will try to get up to that 1698 again early this week. Whenever this line breaks, if it breaks, then I would look at the depth of this total move here underneath it as a likely target. So even though we have not reached it yet, if we get over this line, I think the move over that line should make this whole little week of trading, but should be setting up a move to, just based on this alone, about 1722. But it's got to get over this. Now, the bearish scenario is this is a head and shoulders top, which if it is, I'm forced now to reconsider the neckline and to put it here instead. Why? Well, because I think this move from 1698 down to the 1670s is probably in the short term over. So any move back down to this neckline will probably come after a move up. Does that make sense? In other words, this leg down looks to be over. I think we'll probably come up to test this again. If that fails and we come back down to this line, then break it, then this more than likely will play out as a head and shoulders top, and the target from such a top would roughly be excuse me, the 1650s, which is kind of what isn't that much different than what we were looking at before. The difference is this pattern would become a little bit more long and drawn out. If, on the other hand, we come up to the 1698, then we dip back down a little bit, then come back to the 1698, then we likely see the breakout to the top side, which would give us that 1722. So we are sort of in an area of consolidation currently that will either break out to the 1720s or break out to the 1650s. And I really can't tell you at this point which one will take place, but I can say this. So far, this market has been pretty, what's the word I'm looking for? Relentless on surprising to the upside. So I'm ready for that. On the other hand, if we break this line, I don't think it's going to be a big sell-off, guys. I really don't. I think we are in a move that is really pretty strong here. I remind you, this line down here at 1600, for a while we thought that was maybe going to be an impenetrable barrier, because that was the line drawn from the 2000 tops of the S&P to the 2007 top in the S&P. And your average chart reader would look at that and go, that should put up a fight. And the fact of the matter is, it really didn't. The S&P got out over that, even dipped below it, and then said no, it was no fluke. We belong above this. So any move that we might see to the downside, I don't think is going to be major at this point in time. And I would expect we could get picked up if we see weakness. We could get picked up here in the mid 1650s. And if that were to give way, then I think 1600. And if we were to see some really strong selling this week, then I think even this orange line, but I don't see that. I don't see this week being one, what's his famous last words? I don't think this is a week where we're going to lose 70 or 80 points come Tuesday or Wednesday that would take us down to this orange line. I would expect rather for us to fulfill either this head and shoulders top, and like I said, if it breaks down mid 1650s, or we have the inverted head and shoulders that if it breaks up 1722 or low 1720s. Now let's take a look at kind of what we saw through the week. I'll be honest with you, the week was something of a mess. We started the week in this rising blue channel that was also inside of our turquoise channel, and my expectation was, what it normally should be, and that is you're in a channel, you expect to bounce when you get down to support. So really the week kind of came unglued early on with that late day dip and then the Tuesday morning follow through selling. So once this broke, we knew we look for some sign of how deep this selling is going to be. And it frankly wasn't very deep. So I consider the week to be something of a wash in that even though this broke, there wasn't a tremendous amount of downside to it. And I was not eager upon the breaking of this line to go short, because we don't really have a pattern that tells us a move to the downside would be significant upon the break of this channel. There's just really too many lines that tell us to expect a bounce, and not enough lines to say it's going to be a free fall. Nothing really says free fall here. So basically I have not made any changes in my positions throughout the week. I have a few good to cancel sell orders if we get a rally back up to that 1698, but that would have to transfer over to the individual stocks that I'm holding. And I've also got a couple buy orders, but those are more based upon individual charts in individual stocks, not the overall market. I'll tell you the two stocks that I have that probably track the S&P sort of the closest. Well, I really don't want to say that, but the two that seem to kind of go up on up days and down on down days, I'm leaving those put. So I'm not really fearful of a tremendous amount of downside right now. And if we do get significant downside, I think it'll turn back up in fairly short order. And if the support were to really be deep and nasty, I think there would be a good rally off of that would probably provide a better exit point than trying to than panicking and selling into that sell-off. So I'm being a little bit more patient myself. So coming into this next week, let's see if we get a rally up to 1698, which seems to look likely at this point. And if we do, will we meet resistance there, or will we get back over 1698 and break 1700? Conversely, if we come back down to this bottom line, then if that breaks, then I'm looking for 1655, 1656 as a minimum target from what would then show itself as a head and shoulders top. Really, the week didn't do that much for me. The chart was sort of all over the place. I think probably the best call was just this little potential bear flag that developed, but even it failed to produce a lot of downside, and what it did produce was short-lived, virtually untradeable. So guys, there you have it. Sort of a weak week as far as the chart goes, and as far as bringing my observations to you. So let's see if we get a little bit more indication throughout the next 3 or 4 days as to whether we're setting up the downside target or if we're setting up more of the upside target. And there's a significant difference between 1722 and 1656, though the target itself is only about 24-25 points high. So there's your video for the weekend. Thank you for hanging in with me. Hopefully this week or the week after, we start to see something that's a little bit more tradable and a little bit more exciting in terms of a price target that has good potential in it. So far, we're really looking at nickel and dime stuff. So, hey, thanks for watching. Take care.